Good morning, everyone. Sorry there was a delay here, some technical difficulties trying to get this up and running, but we're here. Morning. Again, slight later start to the session here. Apologize for that. But we have a decent bit of news here as we wrap up the week. Today is Friday to the last trading day of the week. And the news that comes out, right? We have news that came out this morning, which really surprised markets. We had the non-farm payroll numbers and we were looking at the jobs added in January. So the jobs added in January are actually 517,000 versus the 188,000 expected, which is a massive increase for the prior month. Right now that we're the first Friday of the new month, we're going to be looking at that jobs number for the prior month. 517,000 compared to 188,000 is a huge beat on the non-farm payrolls actual number, which caused the market to slip a decent bit because realistically what this means is the jobs market, labor market is strong enough to sustain the continued hikes and the continued tightening pressure from Jerome Powell and the Federal Reserve. So if we take a look at that, we'll take a look at the FOMC, the probability for rate hikes that comes in, which is, excuse me, moving to yawn in front of everyone, but come on, waiting for this to load. So the probability of 25 basis point hike just increased, right? Yesterday it was 82%, now it's 94%, but it's only 25 basis points, right? As we get closer and closer to that 5% mark. That was the main news that came out this morning. We also had news of um, Apple, Amazon, and Google yesterday reporting, right? Risk on sentiment deflated after the bell yesterday, following a slew of disappointing results from the big tech companies, right? iPhone weakness and FX headwinds led Apple to report a first quarter miss, which prompted the shares to fall 3.7% after hours. I don't know exactly where they're at right now, but after this non-farm payrolls number, markets are down pretty decently because naturally you're expecting to see continued tightening process from the Fed if the economy can sustain it, right? Apple was down into 140-ish, low 140s yesterday, trading about 148 right now. So a decent little rally here overnight off of that Q1 miss in terms of earnings. Oh, sorry, I don't know what's going on today. So things weren't any better realistically in Amazon, which posted softer cloud growth and slipped about 5.1%. Apple, Amazon and Google are down heavier than Apple is. And then Google Alphabet tumbled about 4.6% after missing Wall Street's estimate. Um, Despite the losses, all three stocks were net gainers on Thursday, followed by a pretty strong trading session as we ramped up into yet another push to the upside. Even though the macro slowdown and the demand hit is of big concern, this market continues to rally based on this most recent, what looks like to be a buy stop run. But we could be at a target point right now that calls for more of a slip and a turnaround. So we'll see how the markets react today as we get ready for the overall open here and to close out the week. Right, it's been a very strong, robust rally above the 200-day average, coming into some key areas, and a lot of people calling for market bottoms. But we'll see how that shapes up today and what goes on. I didn't really have too much else to cover. Just wanted to cover some of that big tech earnings miss and folly, which is realistically not putting that big of a dampening mood. But the miss in tech, remember I talked about this pretty much all week. The miss in tech here and the, I guess, damper forward guidance for the big tech companies can lead to the next swing to the downside in the market. Do we see new lows? I don't know, but this could start the move into the end of Q1 to push us um, lower in the market in general to close out this quarter. So in terms of levels, right now we're below the 4160 region on the S&P 500 futures, which is a huge top of the distribution block that we've seen play out time and time again. I want to see if prices manage to hold resistance at the 51-52 region, if there's somewhat of a rally to see if this thing can get pushed back down to 41.05, which is the bottom end of the distribution block. So with that being said, I hope everyone has a great weekend. Happy trading on Friday, and we'll see you guys on Monday, where ideally I'm a little more awake and alert. So take care, guys, and we'll see you soon.